Hey, welcome back. Despite recovering a bit lately, Disney is still well below the level from before the pandemic. But with Disney Plus and the overall streaming environment advancing in a good direction, there is quite a bit of potential. Since I looked into WBD and Comcast recently, I decided to look into Disney again and see if there is anything different. The company was affected a lot due to the pandemic. If you remember, they had to close the parks, and even when they reopened, they weren't running at full capacity. But so far, they are recovering pretty well, being back almost to the level from before the pandemic. If they make, let's say, 8 billion for a 185 billion market cap, that's a ratio of around 23, so definitely a bit high. However, there is untapped potential from Disney Plus, which so far has been pretty much a money sink as they were investing heavily, but now they might start to reap the benefits, but more on that in the valuation. Financially, they aren't doing that well, with the current assets not covering the current liabilities. The total assets are well above the total liabilities though, so it's not terrible, and with a credit line or something, they should be okay. You can see about 100 billion in equity, but keep in mind that 74 billion is in goodwill. So in reality, you have about 30 billion in equity valued at around 185 billion. If you look at Comcast or especially Warner Bros, which I covered before, that's quite a bit. Sure, it doesn't include the potential of the IPs, but the difference is quite significant. A year ago, they targeted 5.5 billion in annual cost savings from marketing, labor, technology and more. They can then use it to invest or pay back some debt or do buybacks, dividends and so on. So this is quite a bit of money that can unlock a lot of potential, and it's definitely something to pay attention to in the future. They recently announced a bundle with Warner Bros, and this is an interesting development for the streaming industry. We saw Netflix, Comcast and Apple also doing something similar around the same time. They basically sacrifice the margins, but they potentially win from the volume. Disney and Max together, for example, have many billions worth of IPs, and you can really get a complete package with any of these two bundles. It's a bit early to assume, but I think everyone has the potential to win from this, including the people who can ultimately save pretty good money. Now, comparing it to Netflix, they would be very cheap, like everyone else. Netflix is an almost 300 billion company that finally managed to make like 7 billion. However, they show the potential of the streaming market. You know, even if they make like half of that money, that's almost a 50% increase in cash flow for Disney. That would be enough for them to keep investing, developing series, maybe buying rights for other shows, offering new plans and so on. They have the advantage of owning probably the most powerful IPs on the market. Think about Marvel, Star Wars plus everything they got from Fox. Together, this stuff is worth probably well over 100 billion. Unlike Netflix, Apple or Amazon for example, who have to spend potentially billions per year just to get the rights to produce content, Disney doesn't have this kind of issue. You can see it as a potential future saving of capital, and thanks to this, they could even have a better margin. And if they don't want a certain IP or they get a good offer, they can sell the rights for a new movie or series, potentially producing some passive income from stuff that they maybe don't want or can't use at the time. So there is potential for Disney Plus to make even more than Netflix. You know, with the valuations, and I've seen some videos in the past, it's not about them owning an even better Netflix, but rather what would be fair for Netflix. Using the market's exuberance isn't a good approach, because otherwise, to some degree, in the following couple of years, every big auto producer will have a few Teslas on top of their traditional business, and they aren't worth trillions. Sure, there is a small chance to see the market change this irrational behavior to another company if it does better, but I'm trying to get a fair value. You know, we don't use WBD to make a valuation for them either, because then they would be very expensive. It's obviously great and even recommended to look into the competition, but that should be different from the valuation itself. Now let's go through a valuation. In a bad scenario, if there are issues with Disney Plus and the rest of the company doesn't do so well, let's say they stabilize at a cash flow of 5 billion. It can be worse, especially in another spike of the pandemic or something, but that's an extreme scenario. Assuming a pretty optimistic ratio of 15, that's a market cap of 75 billion, meaning a price of just 41. That would be a 60% loss. Now, can it happen? Sure, but then wouldn't some Amazon or Apple just buy them and recover some of that loss? It's obviously not guaranteed, but for them paying even 150 billion is a 5-7% dilution, and they get probably the most powerful library of IPs on the planet. In a second scenario, if we see a bit of growth in Disney Plus and some cost savings, let's say they get back to 8.5 billion as before. I go with 8.5 because the parks may not run at the same capacity as before, plus inflation may offset some of the savings. For a ratio of 17.5, which is around the average from before the pandemic, that's a market cap of 148.75 billion. That's a price of 81.25, meaning a 20% loss. They shouldn't have issues paying the debt or the interest, so maybe 3 to 5 billion would be free for any dividends, buybacks or investments. In a good scenario, with Disney Plus really paying off and significant cost savings, let's say they get to 12.5 billion. The market would definitely be optimistic, so let's go with a ratio of 25, meaning a market cap of 312.5 billion. That's a price of 171.4, meaning a 70% upside. That's actually very similar to the peak from 2021. Then we can even see some significant 5, 6, 7% yield from the current price, which would definitely be attractive. So you can see that there is a bit of potential, but not really the most attractive at the current price. I'd maybe consider buying in the 60-70 area, which has the potential for a 2-3x or even more depending on Disney+. If they get to the same level as Netflix, they can even make 15 billion, and the market would probably be even more optimistic, making it even more than a 400 billion company. That would be a price above 220, making it even a 4x if bought in the 60s, plus even 15% potential yields. Overall, this isn't the cheapest. Maybe if you believe in the potential of the streaming business to significantly improve the cash flow, this is relatively fair. But, the same I said for Comcast, the deeper I look into the industry again, the more I like Warner Bros. That company, for a reference, is valued at like 20 billion, so about a tenth of Disney, and made almost the same cash flow a year ago. And they also have a ton of IPs, maybe not the same as Disney, who's definitely the leader in this, but this disparity is too big to ignore for me, and I actually started buying WBD recently. Anyway, more about them in this video. Back to Disney, I think they are a pretty good company that should have potential. The financial health is okay, but other than Disney Plus and some cost savings, I don't see that much potential to grow. And the issue is that they can't pay a big dividend either because they don't make enough money at this market cap to give a good yield. Still, at the right price, they can be a good way to get exposure to the streaming industry. I see them as a sure bet on the industry, while WBD is more of a value investment that just so happens to be in the same market. It's a matter of risk and reward. As always, what I cover in my videos shouldn't be enough for you to make any investment decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out, and make sure to subscribe. Thank you for watching, and I'll see you next time.